Today, it's time to hunt for safe havens in stocks versus gold or treasury bonds. Is that true? To our floor show traders, let's find out from Teddy Weisberg and Dutch Masters. Great to have you both. Dutch, we didn't even get to Chicago Fed President Charles Evans, who sounded Mester and Daly's hawkish bell earlier today, saying he's fine with a 50 basis point, or even, he said, a 75 basis point hike in September. What about today's trading response, Dutch, tells you that equities are the best bet right now, or not?
Yeah, I think I'm all for, another 50 bips too, even 75. I don't have a problem with it. Look at what the bond's doing. It's going absolutely parabolic here. I mean, that's a huge move in the bond, but then look at the NASDAQ. The NASDAQ's not cratering. So, I mean, you got a NASDAQ that's up on a bond move like that. That's a great sign. And what that shows me is a lot of these NASDAQ stocks have already done the work. They've already been beaten to heck. And, when you find some that are decent businesses that aren't going out of business, but that are down 80 or 90% like we did with Carvana, I mean, we were buying that stock at 22, 23, 24. It's 33 today. And that stock could go to 60 or 70. And it's not even getting close to its high.
But what do you need to see, Dutch, before you pull the trigger on a stock like Carvana, which just a month or two ago looked pretty dismal?
It did look pretty dismal. There was risk in it, okay? I mean, when we hit it that early, there was a lot more risk in it. But, one of the things, we're not... At Carnivore Trading, we're not looking for safe haven stocks. When we want safe haven, we raise our cash levels. So we had raised our cash levels to about 35 or 40%, and then we dipped into a few things here by adding to some of our existing positions. But we also cut our positions from about 14 down to about 8.
Yeah, well, Teddy, Dutch went to a big cash position. What are you doing right now, considering the market's held up pretty well under the Pelosi headlines? I mean, that could still be worrisome. You've got China saying, those who play with fire will be the ones ending up getting burned. But talk to me specifically about how you view this balanced with all the Fed presidents who've been out there today.
Yeah, I'm not sure that what's going on with Pelosi really is having a major influence on the markets, Liz, perhaps very, very short term. But the bigger issue is still the Fed and still the direction of interest rates, still the inverted yield curve. And for the most part, we remain cautious. And the best thing we can do with funds right now to be defensive is continue to buy the 3 months and the 6 months treasuries until we see some of these unknowns evaporate and create a better environment for the overall stock market. Clearly, July was a great month, which came right after the worst month, which was June. I don't think we're out of the woods yet. I mean, I get what Dutch is saying. I think probably some of these stocks are probably beaten up pretty good. But if the Fed continues to raise rates and in doing so kills the economic goose that lays the golden egg, eventually that impacts on earnings, and that is going to be a huge negative for the markets going forward. So, we're at an inflection point here, I guess. I mean, is this the pause that refreshes? Are we kind of digesting the very positive gains of July? Or is the pause really the next leg down as the Fed continues to push interest rates higher to kill inflation? And I don't think there's any quick fix to that, Liz. This is not something you fix in a week or a month. This is something that has to play out over months, perhaps even years.
Well, that's what Loretta Mester says, and same with Mary Daly and Charles Evans. Boy, they were out beating the bushes, sending up the smoke signals. More rate hikes to come. Teddy, Dutch, great to have you. Busy day.